All right, let's jump right in. Today, we're going to look at a way to simplify trading to find a real edge. We're going to focus on one powerful idea that cuts through all the usual noise and gets right to what actually moves the market. If your trading charts look like a bowl of spaghetti with dozens of lines and indicators all over the place, hey, you're not alone. But what if the secret to consistency isn't about adding more stuff, but taking it away? The whole idea here is that the most effective strategies are often the simplest ones. So instead of trying to make sense of all those lagging indicators, the pros often focus on one single thing: liquidity. Just think of liquidity as these big pools of orders and interest that naturally build up at key price levels. You see, professionals don't try to predict the future. They just react to these zones, especially when they see other traders getting caught on the wrong side of a move. And that brings us right to the core of this whole strategy. It's a term you might have heard thrown around, but really understanding how it works, well, it can totally change how you see the market. So let's break down exactly what it is we're hunting for. Okay, let's paint a picture of what this actually looks like. Imagine there's a key price level, a ceiling that everyone's watching. They're all thinking, once it breaks through, it's going to the moon. So they pile in with buy orders. But just as it pops through, bam, the price slams right back down. And just like that, all those buyers are trapped in losing positions, creating this massive pressure for a move in the total opposite direction. That right there is the trap. To really nail this down, we need to see how it all plays out, step by step. So we're going to dissect this entire process, from setting up the chart to spotting that final crucial signal. It all starts here. A nice, clean chart. No indicators, no clutter, nothing. All you need are two simple horizontal lines, one for the highest price of the day before and one for the lowest. These levels are like magnets for the market, because that's where huge pools of orders and stop losses tend to be sitting. And next comes the bait. The price makes a really convincing move past one of those key levels, either shooting above the high or dropping below the low. Now, to the untrained eye, this looks like the real deal, a classic breakout. And that triggers this flood of orders from retail traders who have a serious fear of missing out on the big move. And here it is, the most critical moment. That breakout just runs out of gas almost immediately and snaps right back inside the previous day's range. The trap has been sprung. All those breakout traders are now sitting on losses, and they're forced to sell to get out. And all that forced selling? That's the rocket fuel for a sharp, powerful move in the other direction. Okay, so we've dissected the trap. We get the theory. Now, how do we turn this into a practical, repeatable plan of action? Because, understanding a concept is one thing, but having a clear set of rules to actually apply it, that's what turns it into a real strategy. And here it is, boiled down to its simplest form. Step 1 is just your daily prep work. Seriously, it takes less than a minute. Step 2 is all about patience. You're not chasing the market, you're waiting for the market to come to you and show its hand with that failed breakout and that sharp reversal. And remember, this trap works both ways. If the price breaks yesterday's high and then fails, all the buyers are trapped. That gives you a potential signal to go short. On the flip side, if the price breaks yesterday's low and then fails, the sellers are the ones who get trapped. That's a strong signal for a long entry. It's the exact same pattern, just mirrored. Okay, let's talk about something absolutely crucial here. This strategy is just as much about psychology as it is about looking at charts, because having the right rules is pretty useless if you don't have the discipline to actually follow them. And this quote from the source material just says it all, doesn't it? It perfectly captures the mindset you need. You're not a machine gunner just firing at everything that moves. No, you're a sniper. You might sit there all day just waiting for that one perfect setup. And that's okay. The goal isn't to trade a lot, it's to trade well. So why go through all this trouble? Why practice this kind of patience? Well, let's talk about the potential payoff from mastering this one single setup. Now get this, the claim in the source material is that disciplined traders who really master this one setup can potentially hit a very, very high win rate. We're talking in the 85 to 90% range. Now, obviously that's a huge number, and results like that are never a guarantee. It all comes down to super strict execution and managing your risk, but it's a bold claim that really shows the power of specializing in one high probability pattern. All right, so let's boil this all down. What are the key things to remember? First, simplify your charts. Ditch the clutter. Clearer charts lead to clearer decisions. Second, make the previous day's high and low your anchor points. Those are the natural liquidity zones. Third, you've got to wait patiently for the trap and the reversal signal. Don't force it. And finally, you have to adopt that hunter's mindset, because great trading is all about precision, not constant action. So I'll just leave you with this one final thought. In a world that's getting more and more complex, with faster news and smarter algorithms, maybe, just maybe, the real advantage doesn't come from trying to outsmart it all. Maybe it comes from understanding a simple, repeatable pattern in human behavior: the fear and greed that fuel these traps day in and day out.